Hello, welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Well, I spent the weekend traveling, so I haven't made a video in a couple of days. But the good news is that price is pretty much exactly where it was the last time we spoke. We'll look at the price chart and we'll go through a few on-chain data points to make sure our expectations for the market are still intact. There are a couple of headwinds this week that we'll touch on as well, things to keep in mind. There's a lot of fear in the market, and whenever I see sentiment shifting dramatically, I like to dig in the data and try to remove myself from the fervor of the news cycle. So we'll hop around today and try to get a sense of where we think the market is going. If you enjoy this content, make sure to give my video a thumbs up and subscribe to the channel. If you enable the bell icon, you'll be alerted to all of my videos the moment they come out. I really appreciate your support. So let's get into the charts. So here we are, still ranging sideways as we expected. In the previous video, we talked about the behavior of Bitcoin after major liquidation events like we saw on December 4th. In a moment, we'll go back over that. But our expectation is that price would continue moving sideways and chopping in this liquidation zone here. So far, we're getting that, but it's an even tighter range than I thought it would be. We're also currently sitting on top of the 200-day moving average and the 50-week moving average. These are both highly watched by traders. And if we were to lose one or both of these moving averages for a length of time, it may bring more bearish sentiment into the market. But I'm not someone who uses moving averages and trend lines as gospel. You can see even on this chart, there are times when the 200-day moving average is lost and then immediately reclaimed. Same thing for the 50-week. So while these moving averages are important, and many traders like to look at them because historically they have marked good bull-bear oscillators, I don't think that these alone will dictate the outcome for us. But it is worth looking at and mentioning and factoring into our analysis. Also, turn these off and turn this on. This indicator is from my friend and colleague Permeable Nino at Glassnode, and these are retraces. This red line here marks the 50% median line between the 360-day high and low. In other words, it's the halfway mark between the year's price action, and that value is also currently finding support. This 50% yearly retrace has been a good support level for Bitcoin in the past. See, it got caught back here in the August rally. But again, like the 200-day and the 50-week moving averages, I don't use them as gospel. They're just a guideline for me. Right now, we have support on all of them. The daily candle for now did open below the 50-week moving average, so that is something worth watching. But right now, we still have support on the other two, for what it's worth. We look here on an intraday chart. This is a 2-hour chart. You can really see the range-bound nature of price in the last 10 days. Just gives you an idea of how tight we have been consolidating. So here is a Coinalyze chart. This looks at the price of Bitcoin and all open interest in futures. Open interest is the total dollar value of all contracts. And the reason we're going to look at this is to look at the behavior of Bitcoin after liquidations. These candles here represent major liquidation events from 2021. And what we've done after all of them is consolidate sideways and test the range low before moving on. We did that here, we bounced, and then we went down. Here, we bounced, and we moved up. In September, a couple of bounces, got below it, found it back as support, and off we went. Over here, we caught the liquidation low, and we've now bounced up quite high, in fact. And now what's interesting is that we've got this open air underneath us, which is unlike the previous 3 times that we tested the liquidation low. So if I'm looking at this, I do think that we possibly have room for, let me turn my yellow back on, we have room for price to come back down and test this lower 40s level a couple of times. And if it did that, it would still be within historical norms. So this is what's informing my expectation that we hang out in the low 50s to low 40s until a clear direction is established by the market. And I don't believe at this time that December is when we will see that. There's a lot of talk on Twitter about a late December, quote unquote, Santa Claus rally. And at this time, that doesn't fit with my base case. I'd love to be proven wrong and see some giga crazy bull rally at the end of the year. But right now, it doesn't feel like the ingredients are in place for that kind of price action. Here is futures open interest in Bitcoin terms. So on the previous chart, we looked at it in dollar terms to analyze the various liquidations. Here, I just want to show it in BTC. After the event on the 4th, we liquidated back down to relative yearly lows in terms of total open interest. And it's been rising the last few days, but remains at what I would consider a low level. Where it really starts to become concerning is when open interest gets up near 375, 380,000 BTC. This level right here. This tends to be where high volatility enters the market, where derivatives have an outsized impact on the spot market. But right now with OI still being down here, my gut feel is that we are still in a spot driven market and derivatives would need to build up quite a bit before we'd be concerned about them again. But we do know that that can change quickly. You know, you can get some contracts open in a single day that shoot us back up to 380,000. So it's worth watching. But right now we're not seeing a massive influx into futures. So I'm not paying super close attention to it today. Here's our P&L dashboard. We've been talking a lot about this dynamic in realized profit declining and realized losses increasing as we stayed up here in the 50Ks. At the time of recording, we're below 50. It's 47.1 thousand right now. But generally, we're hanging around in the 50s and high 40s. There are a lot of holders of Bitcoin that have them at lower prices. The vast majority of supply is in profit, but profit taking is not occurring. It's declining from its high in mid-October. Realized losses had been increasing. And what we've talked about on this channel is that for losses to be realized here means that people have coins in loss from the top. That's literally the only way it can happen. So we were waiting to see these sellers get squeezed out. When price rips to new highs, there are always people who buy the top. And then on the next pullback, those people are the first ones tested. When you have a giga strong bull market like we had in December and January of a year ago, people who buy the top are immediately rewarded with a new top. You know, price never really tests them. But when you have a market like we're in now, where we create a new all-time high and then price pulls back, that's where you start to see chop. And that's the behavior we've been watching. So we've been seeing loss realization on chain by folks who bought the recent highs. But what I've seen now, and granted this is a 7-day moving median, so this is a bit slow to react to the latest data. But what we're seeing, it looks like, is a slowdown in the rate of realized losses. So it is tapering slightly in the last few days. This is now 4 days of this milder value. Could we be seeing the emptying out of sellers? It's very possible. If price continues to range sideways, we will reach a point where everyone who wanted to make a decision here has gotten their chance. Now, if a catalyst comes along that shoves us into a new price zone, let's say we go below the liquidation candle of 42,000, then some people will be spurred to act, right? We'll get some new holders that decide they want to either buy or sell, and the market will have to decide for itself what it's going to do. But right now, if we continue to range as we have theorized, we will reach a point where all of the top buyers who wanted to sell will have done so. When we look down here at the spent profit ratio of short-term holders, this is really representing the selling going on by these top buyers. We had seen a few lower prints from this chart below the value of 1, which means that these coins were being spent in loss by these short-term holders, by people who had bought in the last couple of months. And they had registered the lowest profitability print since July. It was really remarkable. But this value is now creeping back up towards 1 over the last few days, and it could signify, along with the tapering of realized losses, that we might be reaching a seller exhaustion point. We're also seeing muted profit taking from long-term holders who are currently, as a group, sitting in over 2x profit. They are at times in much higher percentages of profit, but this group has absorbed some of the buyers from the spring rally and the summer lows, and their cost basis has risen as a group. So their standing profit ratio as a whole is not as high as it used to be, but there are still a great many holders from before January that have coins in considerable profit, and they are not realizing it at this time. You can see by the decline in long-term holders spent profitability. This chart on the left is all groups combined. So this is the net outcome of the short-term holder spending and the long-term holder spending and everything in between. And right now the market is at equilibrium. We had some loss realization and it's now printing a value above 1, which means these coins in aggregate were spent in profit. This is a positive sign to me. And if we continue to see this dynamic playing out and it doesn't spike down lower, I think that this is painting a picture that tells us sellers are running out of steam. This chart here shows the percent of entities in profit, and we talked about this in the previous video. I'll leave a link in the description below if you'd like to go check that out. The remarkable thing about the percent of entities in profit is that it's now below the value it was at in September. So why does that matter? Well, in September, price was 41,000, and the amount of entities, individuals on chain, who were in profit was about 80%. Well, as we ripped up in October and created new all-time highs, 100% of the entities on chain were in profit. That's what happens when you create new all-time highs. But in the weeks following, as we have pulled back, the amount of entities in profit has fallen below the level it was in September. And it's now at the lowest level it has been at any point this year except the depths of the summer, July 18th and 19th. That was the last time we had fewer people in profit than we have now. But price back then was 31,000. But now price is at 47,000. And we have barely a couple percentage points more entities in profit. So what does that mean to me? That tells me that there was a large distribution of coins at the top here. A bunch of people bought Bitcoin at these very high prices, and they now sit in loss. And that is this loss realization we've been seeing up here. Not every one of these buyers will want to sell. Many of them likely already have, and the rest of them are so far holding on to their coins. They've been given opportunities to make decisions, and they've chosen to hold them. And they're now sitting in loss. For price to be $15,000 higher than it was in the end of July, but the amount of entities in profit to be roughly the same really demonstrates how much distribution happened up here. But another curious thing about that distribution is that it did not come from old hands. We know that because we haven't been seeing a spike in long-term holder profitability spending, which is what we would see if old coins were spent because they're all in profit, right? Well, this value is declining, but we know that short-term holders have been spending because we've been seeing their values fluctuate wildly, and we've been seeing a lot of loss realization. We've also noted that long-term holder supply in general has barely begun distributing up here at the highs. This outflow rate of change is extremely mild compared to what they're capable of in a properly strong market. So a few of these top buyers bought their coins from this long-term holder group here, but this is only 1 or 2 percentage points of their whole supply. They're really not spending. They are not the group that is creating this major distribution curve that we're seeing. So if it's not coming from long-term holders, the only logical explanation is that the majority of this distribution happened within the short-term holder cohort, which is about 5 months long. So for these folks to be buying coins off of others who are also in their short-term holder group means that these coins were bought from folks who got them here, who got them from the middle of June until the middle of November. Short-term holders bought supply in here, held it as a swing trade, and then distributed it at the top to newer buyers. Many of them now hold coins at a loss. So we're seeing a really interesting dynamic here where long-term holders are not playing a huge role in the market, yet we are seeing coin distribution. So it's a fascinating dynamic to me, and it helps to frame my overall thesis for the market. It's hard for me to say that Bitcoin is bound for 20K and lower prices like a lot of bears think when I do not see the holders of the majority of supply giving up their Bitcoin. They aren't doing it. All of the selling is coming from the same small group of holders. It's all coming from short-term holder supply, this group here, which has gained a bit of supply. They've gained a few coins off of this group, the long-term holders, in the last few weeks. But a lot of the activity that's going on chain is within the supply they already own. It's this 3 million coins that they have, just churning over and over between different buyers. Here is illiquid supply chalk on a 14-day rolling basis. Red circles are growth in illiquid supply, and blue circles are a shrinking of illiquid supply. Illiquid supply represents the hodlers. Now, many long-term holders are a part of illiquid supply. There is an overlap, but they're not a one-to-one group. Illiquid holders have a low amount of outflows. These are the hodlers and the dollar cost averagers. These are the diamond hands, and they have been buying aggressively here. If you see in the background, this gray line is the raw supply for illiquid, and it's been growing. Look at this. It's been angling up for the last few months, and they've been buying. Look, these quick spikes here at the top. You can see these little juts up in illiquid supply represented in these big orange prints. Hodlers are accumulating Bitcoin as weakness is being shown. As these short-term holders are realizing losses, spending coins in loss and distributing to new buyers, many of those new buyers are illiquid. They are accumulating this supply, and the amount of supply they own is now at an all-time high. I know that price looks terrible and there's a lot of bearishness out there, but what's going on with Bitcoin under the hood, the actual people that hold spot Bitcoin, they are telling a different story from the mainstream media. Average Joe investor who doesn't know anything about Bitcoin is not currently interested in buying it. I think it's obvious that we don't have casual retail demand, because if we did, price would be ripping and all of the distribution we've been talking about would get absorbed by buying volume. But we don't have that climate. We have not had that climate since the spring. I think it's fair to argue that we've been in bear market conditions since May, since this big blue distribution of illiquid supply. This was really what kind of ended all the fun, right? And we've been recovering since. It's remarkable that we created new all-time highs, and it's a result of minimal selling by older hands. But we still lack the strong demand side of the equation that would give us the conviction to say this is a proper bull market. And I think that part of the difficulty is in the expectation of what a bull and a bear market are. Many people's framework for what to consider bull and bear is based on the legacy markets. Legacy markets define bull and bear by percentage drawdowns in price. A 20% drawdown in price in equities constitutes a bear market, but a 20% drawdown in Bitcoin is a Tuesday afternoon. There's a major disconnect in the expectation of what a bear market is for Bitcoin and what a bear market is for something on the New York Stock Exchange. Bull and bear markets for Bitcoin is really about mindset. Since we can see the behavior of investors on chain, we can see them buying and holding. Our bull and bear markets are really driven by the hodlers themselves. And so what I think we need to consider when we talk about whether we're in a bull or a bear market is what the actual holders of Bitcoin are doing. And if by and large, they are continuing to add to their stacks, it makes it very difficult for me to make the cogent argument that Bitcoin as a whole is in an unhealthy place. We're just not seeing that behavior. The headwinds that are playing against Bitcoin now are macro in nature. They're related to the Fed. They're related to consumer price inflation, to possible tapering and raising of interest rates, to supply chain constrictions, to coronavirus response by various governments. All of these factors are what are weighing on consumer sentiment, not Bitcoin itself. The holders of Bitcoin are telling us that they still have confidence and that they are accumulating in weakness. You're literally seeing that on my chart in front of you. So when we see all these realized losses on chain and we see the spent output profit ratio dipping below zero, while also seeing very muted profit taking from long-term holders that we have established own 13.5 million coins. When we don't see that group doing anything but adding to their stacks or just mildly distributing, it tells me that we've got a disconnect. There are a lot of super bearish new investors, and then there are a lot of hodlers who just don't seem to care what the news is saying. Now, headwinds for this week, I believe, are related to the Fed meeting, which is taking place today and tomorrow, the Federal Open Market Committee meeting that they have every month. My gut says that many of the folks who see Bitcoin as exceedingly risky have already sold out of it. We've been seeing a de-risking style of behavior for the last couple of weeks with all the loss realization we talked about. Meanwhile, many of the longer-term cohorts, long-term holders, illiquid supply, all those groups are standing firm or growing their stacks. They're the groups who do not see Bitcoin as risky. They see it as a hedge against these forces we're talking about. So I think we've been seeing many of the weaker hands already leaving the market, and it's possible that we don't have many more of them left, barring some new external catalyst that drives them to act. And that catalyst could come from this Fed meeting. Just this morning, we saw that the producer price index jumped its highest year-over-year increase ever, up to 9.6%. One of the basic rules of economics is that all costs are passed along to the consumer. So when we see producer prices rise, it stands to assume that over the next couple of months, many of those increases will make their way to the consumer basket. That's a headwind for all markets generally. So this is a time to be cautious, to sit on your hands and observe the markets, and not to be sitting in any assets that you perceive as exceedingly risky. Not a time to be taking on leverage. It's not a time to be overexposing yourself to any speculation, especially as we approach the end of the year. Many institutions and hedge funds are risk off for December, looking to lock in their gains after a pretty tumultuous and volatile 2021. So if the smart money is not taking action here, then I don't want to be either. But I do keep some dry powder on the side because when I see quick flushes in price, I like to add to my stack, which is what I did on December 4th when we had that liquidation. I was a buyer at 44, but this is not financial advice. That is my personal plan for my investing. So what I would recommend this week is to pay close attention to this Fed meeting. Pay attention to what Jay Powell says, the kinds of things that you're hearing from Janet Yellen. My expectation is that they will announce a more aggressive tapering of bond purchases, but that they'll kick the can down the road in regards to raising interest rates. I don't think that they have any room to raise rates. I think it would cause more harm than good, and I feel like they're hamstrung in the amount of decisions that they have available to them. So with what we know about the way Bitcoin behaves after these big liquidations, where we move sideways and test the lows, and how we haven't actually tested the true liquidation low of this range, we are currently primed for some mild FUD out of this Fed meeting to give us a proper test of the liquidation low around 42,000. Be ready for that to happen. If it does, I will be watching for that level to provide support, because if it doesn't, we might be in for more extended downtime. But as we discussed, loss realization looks to be slowing down. The amount of loss taking by short-term holders, by their spending, appears to be slowing down. And the long-term holders are not dumping their coins onto the market. They've only distributed a small percentage of their total supply, and the rest is being held. At the same time that we're seeing a growth in illiquid supply. Strong-handed hodlers are accumulating Bitcoin as we are seeing weakness, as we're talking about these possible headwinds. This group can distribute. They've done it before, and right now they're not. And they own 14.5 million coins. Just something to keep in mind as you're planning the next few weeks. Those are the main things I wanted to cover today. There aren't a lot of new insights to be taken from the on-chain data, but the behaviors that are playing out are what we expected to happen after the liquidation event. We're seeing consolidation sideways. We haven't yet properly tested the liquidation low, and we're seeing selling by top buyers who now find themselves in loss. Meanwhile, hodlers continue doing hodler things. I will be watching the Fed meeting over the next couple of days very closely, and then we will look to see the market's reaction. I don't expect that we will have a euphoric Santa Claus rally to close out the year as some believe. For the reasons I've explained and the things we've gone over today, I just don't feel that the ingredients are there to produce that kind of an outcome. But I'm encouraged by the behavior of long-term holders and illiquid types, and I am glad to see what appears to be healthy loss realization by these top buyers, because they need to be cleared out of the way in order for the market to have a healthy appreciation. If you have any questions about the things we talked about today, if you feel like I've overlooked any factors in my analysis, please let me know in the comments and I'll check them out. There's a lot going on, and trying to get my arms around all of it is a challenge. I'm just a guy on the internet who loves data, so please do not use this information to guide your own investing. I encourage you to do your own research, but I hope that this channel and the videos that I produce are part of your trusted research. Make sure you follow me on Twitter at TXMC Trades. I post constant analysis, I go on podcasts, you can find out about all the things I'm doing that aren't on YouTube. I'll be watching this Fed meeting closely over the next couple of days, and I don't anticipate the markets will be making any big moves barring a new news catalyst. It's a good time to sit on your hands and patiently observe. Wait for the market to show you a direction. We'll speak again in a couple of days. Take care of yourselves, friends. Be kind to one another. We'll chat soon. Cheers.